Hi, good evening. This is Victor from Trend Following Trading for Beginners. And in today's episode, I want to talk about how you can improve your trading result by using a method called pyramiding. Coming up next. Okay, before I start, I have to give a health warning here. The pyramiding method, what we call pyramid trading strategy, I'm going to talk about in this episode, can seriously increase your wealth. But if you use it wrongly, it can hurt you financially as well as emotional. I'll give you a lot of emotional pain as well. So let's cut it short, straight to the point. What is pyramiding? Basically, when I started learning about trading, I always found just the lack of how I can improve my result. And I didn't know there was this method called pyramiding, but I was thinking of finding a way to increase my result when I'm in line with my trade. Let's say I buy Apple and Apple continue to move up. Using my long-term 50 days to over 20-day moving average, I want to find a way to capture more of that profit by increasing position size. Basically, have a lot more of my buy a lot more shares in Apple, so to speak, as the market goes up, as Apple share goes up, providing within my budget, my account size and so forth. But I could never find a method that I'm truly happy about, because obviously every trading is risky, and the share or forex or index, whatever it is you're trading, can go up and down and come back and bite you. And I just want to find a way that I can actually more comfortable to implement. Then I come across this book, which I talk about in some of my episodes already, called from Michael Covel, called The Complete Turtletraders. And in the, I think, episode in the chapter 5, it talks about the methods of the turtle systems, and also talk about how they use pyramiding. Basically, is if the system, if the trade is going in your favor, you consistently add more up to a certain amount on each trade, up to a certain method to add more, so that when you in the market and in line with the market action and the price continue to move up, you have more of your basically money at risk to on a trade that's already showing you a profit. And hopefully that if the trend is true, is actually continue to run, you have more of your money on that particular trend, and then you can carry the end of that trend stops. When you stop yourself out, you will be able to capture more of your of the profit from the market, so to speak. And I got introduced into this method by basically Michael Covel's book, The Complete Turtle Trader book, and I have been using that for 5 years now. First I ever read from the book, and I find it very useful myself. But what I did not realize is what emotional pain it can give me, because like at the start of my journey, try to find a method to give me better results. I have what you call reluctant, or I'm not able to find a way to do so, and also if I'm quite risk averse at times, and I want to find a way that I can simply that I'm comfortable with to implement. But what I did not realize after reading the book and so forth is that the emotional side of the roller coaster that it can introduce. This is why I give you a health warning at the start of this episode, because to me anyways, everybody and his dogs would like to make more money from the market, but nobody is prepared to face up to their own demons, that is the trading demons I call them, when the market go against you, and how you handle your losses. And of course, if you risk more, your risk per trade increases, and how you can handle that. And when I start using the pyramiding method, I found it very useful at the time. But when I make money, but when I'm not making money, which in most cases I'm not, I found my losses stack up. Because what happened is most shares, index, whatever your forex you're trading, most of the time the instrument you are trading is not really trending. It's going sideways. So there's people talk about market go up, market go down, up 30%, down 30%, sideways 30%. So when it's go up and down trend wise, you can capture more money from the market. But when it goes sideways, it trend following doesn't really work. And you put on top of that with pyramiding, you really hurt yourself quite a lot as well. So what I found also is over time, it's not really 30% of each way. I found it like maybe 10 or 20% of the time that it's actually trending, a trend up or trend down of any shares or index or any market. And then the rest, like 70-80% of the time, is like side trading in a range, in a channel. And trend following, even though I like it, because it's just suit the time frame and the give me freedom to do things and so forth, just fits my personality. But the way that trend following takes a lot of patience, and if you implement it correctly, plus this pyramiding method, you can make a lot of money. Period. That is confirmed. I've done it before. But the emotional ups and down roller coaster basically increases as you put more trade on. You increase the more pyramid size. And I've done a lot of, a few months putting this method into a computer program and basically back tested using my charting software, exporting all the data, so to speak, the the closing price, the open price, the highest of the day, the lowest of the day, and the volume, and basically use that to do the calculations. And basically all that calculation, mathematics and stuff is all in the Turtletrader book, so I'm not going to talk about it. Just go and find that from the book, and also will provide the link in the description of this episode. But what it always never tells me is it's always show you the positive trades from the book. Now, if it works this way, if it doesn't work, it doesn't really tell you. It tells you some of it, but it doesn't tell you is the emotional challenge of implementing this method. But it can make you money quite quickly. And but the risk control, you have to be quite mature, quite able to handle it. But when I first started, I didn't have that control and emotional maturity to take the risk as is, just like a business, and not worry too much about it. So it took me a lot of time to actually get my mindset going and get it working. But once I more or less got my head around using this method, I found it quite comfortable and quite useful. So from my own internal usage, basically, like I said before, pyramiding, just adding on to more of the position that you're already been in, either going uptrend or downtrend, and then basically to capture more of the money from the market, and so to speak. And but it can be used in shares, forex, indexes, futures, or cryptos, whatever you want. And it myself basically is I found that because of the emotional control and also the risk control, I found it's much more useful through my trading experience. Is that pyramiding, you need to be careful. It's a bit like debt. It can help you and it can also kill you financially. And to try to handle, you can learn it properly with the emotional control. You really need to split the pyramiding method into chunks. So instead of like the complete Turtletrader book that shows you can build up to 5, I would say, and you first start as a new trader, maybe start with just one. Okay, what I would say is stick with your system. Don't add anything on it until you're very happy. Let's say at least 6 months or a year. I would say personally a year, that you are comfortable with your system. That is comfortable with the winnings. You're comfortable with your losses, the amount that you win, the amount you lost, and the emotional pain or joy that come with your trading method, and you're happy with that. Then you add pyramid thing on top. At least do like adding one more trade. Let's say you go in year one when you first started, just take a trade, and your system basically tells you to take that trade. You just go ahead to do that, and then year two, when you're comfortable with your system on year one, you basically add another trade. So you take two trades. Now one is original trade, the other one is your pyramid trade. Trade one, I call that, and trade that for a year, at least 6 months. And again, basically train your emotional side and risk management side of things until you're comfortable with it. I mean, if it takes longer for you to be comfortable, it takes longer. But I would say bare minimum 6 months. I recommend a year. And then you basically, year three, you can take, 3 trades. So original 1 trade and plus 2 extra pyramid trade. And so forth. So year 3, you do 1 original trade and 2, additional pyramid trade. Year 4, you can do 1 trade plus 3 more additional trade and so forth in year 5. But I would say, if you're really good at it over time, the latter part of it, pyramid thing, you become more comfortable with this. You can shorten the time to 6 months, but I would say minimum 6 months. So between 2 to 3 years, you start to get a hang of this method, and able to control your emotion as well as feel comfortable with it, provided you can stick with it as well. And it can increase your trading result dramatically. Basically, if you think of it like what I've said before in some of my episodes, take a bell curve, so to speak, like a top hat. You on the left hand side, you chop on one side of it. Basically, that side is your anchor point. Basically, your maximum loss represent. Okay, your left hand side, cut that off, so you get a hat without the left hand side, the rim on the left hand side. So on the right hand side is all the possibility of some losses, small losses, no win, small win, and then medium win, and then large win at the other side of the rim. Okay, of the hat. What you basically doing with this pyramid method is you push your trade that is going in your favor more dramatic to the rim of your side of your hat. Basically, it means that when the trade is really going in your favor, you risk more of your capital, so that the effective result of the end of your positive trade basically get you more money from the market. And you basically, if you keep on doing that, you have a couple of this per year, your market can turn, your account can turn from winning maybe a couple of percentage point or 10% per year to 15, 20, 30% or maybe more. If you read Michael Covel's book, sometimes if the trends really go in your favor and you capture the right market, you're in the right place at the right time, it really can help to increase your account size very, very quickly. And I personally have tried it. And what happened is I trade on one, just very old, my first example is I do spread betting, and I basically trade gold back in, I think, 2010, 2011, that sometime, when gold fluctuates a lot but move uptrend quite well. And I bet only £1 a pawn. And over that time, that period, because the trend is really going up in a pyramid up, and I end up I have 5 trades, basically £5 spread over 5 pawns, 5 trades, and for a period of just over a month and a half, I make basically £5 bet, and I'm able to capture about just over £1,000 for about 6 weeks worth of work. But that emotional ups and downs, it was very painful. I was trying to get out, because what I see is I make some money at the start as I pyramid up, and then the market go against me, but I haven't touched my stop loss point, and I keep on getting doubtful in my mind that how am I going to get around this? Should I just get out because I just want the money? I mean, I see my account go from a couple of quid to 500 quid, coming down to about £100, and then go up to 300, and then go to 600-700, and coming down to about 300, and I was like, what the heck? They're moving so much because I have my 5 position on at the very early on of the trade, using the half ATR to pair it up, which is explained in Michael Covel's book. I basically say, okay, let's stick with it because that's the method seems reasonable, logical to me. But like I said before, I never say watch out the emotional side of roller coaster that you will be experiencing, and that took me. It basically bring my mind up and down like coaster ride, to a new level I never experienced before. And I have a lot of elation when I was in the market, in the money, and then when the market go against me, it's like, oh Christ! It sort of almost touched my stop loss, but it's not. But I saw 700 quid down to like £300 or something, and at the highest one I think was gone up to like 1,300 pounds, something like 1,300. But when the trade goes against me, I stop out using the actual method, the turtle trading system, system 2. When I use the 55 days breakout and then the 20 days stop out method, and I make just over 1,000 quid. But that experience taught me that I can make loads of money if I'm properly prepared. So what I've done since then was I took 6 months to basically, I take the first trade, which I've done before anyway, but I had one more trade, one pyramid trade, and I make myself to stick with that for 6 months until I'm at least happy or reasonable, able to manage the emotion. Then I add another pyramid trade after 6 months. So it took me like 2.5, 3 years to get myself comfortable just using this method, but it does dramatically increase the size of my account, especially if you got a small account. And providing you are using, like, for example, my sample trade, trading, selection, which I sort of go up, talk about every week on the weekends, providing that breadth of coverage of different markets, shares, indexes, forex, softs, metal, cryptos, whatever is across the board, and oil and so forth, gold, metal and things, you will capture something, okay? And when you capture some trend, make sure you use the pyramid method up to the emotional control or the pain point or how comfortable you can handle, and use that to basically to increase the chances of your winnings and increase the size of your winning as well, so to speak. And I found that it dramatically, like I said before, increased my trading account. But it took me a long time to learn about this, and I basically written down in my own journals how much emotional pain I suffer. I like read back on my own journal. It's like, wow, how the hell did I get through that? And sometimes, I mean, just like most recently, and I make another couple of thousand quid on British pounds against Japanese yen. I mean, it was basically breakout. The S2 turtle trading system, system 2, gave a trading signal around mid-April of this year, 2019, and then that market only gave a sell signal around August, August, early September time. It basically took like 3-4 months, and then I make a couple of grand out of that. But that's the type of trend that you're able to make money that you can make, and probably more if I put more, if I have a bigger account size as well, and basically I can trade more bigger risk. My 1%, if my 1% is larger, then of course I can capture more. But the essence is the same. It's not about the money at the start. It's really about you sticking with your method, and you're happy with that, and you use it all the time, and you're comfortable with it. This extra pyramid thing basically like rocket fuels to me for my account. and really dramatically increase the account size, but it does brought me a lot of pain. And basically it taught me a lot more of risk control. The other thing is when you do a pyramiding up, you risk more. So in one trade you risk 1% of your account size, but if you're pyramiding up to 5, you basically, if you're following Michael Covel's or the Turtle trading system, the pyramiding system, as per Michael Covel's Company Turtle Trader book, you probably risk about 4%. 4% of your total account size. And that also taught me in the previous. This is what taught me basically quite to control my risk, to be more careful. So I basically sometimes I haven't done that yet, but I think I'd be much more comfortable at the start if I risk only like 0.5%. I know that means account size from my small account or so forth. It means hardly anything. It's very small money that I put on the market. But at the end of the day, here I'm to repeat myself like a broken record. It's not how much money you make, it's how much money you can lose, and watch out on that and cut down the losses. And most importantly, follow your method. So like Warren Buffett say, you look after your losses. First rule of trading is to keep your losses small, don't lose money. Second rules of trading is follow first rule, don't lose money. So in trend following, I would say, risk minimum as you can. But when you're winning, try to maximize as much as you can so that you can turbocharge your account, so to speak. So this is what I found. I mean, the risk control and also the emotional control, which I talked about. The emotional ups and downs really wasn't what I was prepared for. But you can basically, you go through it and you basically find out you slowly get used to it. But to be fair and honest, a lot of people might not be able to handle that pain. So this is why I devised my own method. Is like, increase one pyramid trading, extra trading on each 6 months or maybe a year. Depends really on myself. But I found 6 months just about right, between 6 to a year. And I recommend that to you to use that as well. So hopefully this particular method that I use will help you if you actually use it. And if you found any issue or problems and you want to find out more about it, I would recommend you to read the Complete Turtle Trader book. Also, the book from the book called Reminiscences of a Stock Operator also talks a bit about it. I mean, in that book you talk about is like maybe at the start, but this is from I think it's what you call Jesse Livermore. When he use it, when he tests his method, he basically use like 30% he put up, and or 20% or so forth. And then if the markets go in his favor, he put another 20%, and then another 20%. And the final one, he put in the final part 40%, basically to complete 100% of allocation. So for a particular market or shares or index or whatever it is he's trading, and it seems to work that way. But the book from Complete Turtletraders give a consistent same amount of pyramiding, same amount of money for each pyramiding trade. So that's just slightly different. But I like the way the Complete Turtletrader book says, because at the start of every trade, you have no idea if it's going to win or lose or loser. So what I'm happy with is, and basically recommend to use is try to gauge your risk. So risk as little as you can. So when you first start, risk 10% of your account, 1% of your account, but like 10% of what you actually, ultimately for a trade that you want to be on that particular market, and then put up, equal amount, so that if the market goes against you, you risk less, and basically then get hurt less. So that's one recommendation. But anyway, go and read the book, and I will put the two links for those books in the description as well, so hopefully then you can just get on Amazon yourself, and definitely useful. I also talk about these two books already in one of my episodes about the top 5 books I recommend for trend following, so check out that episode as well. So I hope you found this episode useful, and I'll speak to you the weekend. Bye.